What are trend lines? The backbone of identifying market direction. In the forex market, you have two main actions, buying and selling. But how do you know which one to choose? The key lies in understanding the market's direction, and that's where trend lines come in. These are essential tools for traders and will soon become your best friend on the charts. Many traders incorrectly place trend lines, which can lead to poor trading decisions. But once you learn to spot and draw them accurately, they will help you interpret market direction with precision. Here's what a typical trend line looks like. Types of trend lines. There are two types of trends. 1. Downward trend. 2. Upward trend. Upward trend, bullish. An upward trend, also called a bullish trend, suggests you should look for buying opportunities. A downward trend, known as a bearish trend, signals it's time to consider selling opportunities. One easy way to remember the difference between bulls and bears. Think of how they attack. Bulls thrust their horns upward, while bears swipe their paws downward. Easy enough, right? Uptrend, downtrend. Now that you know what a trend line looks like, the challenge is drawing one accurately. Fortunately, certain market features can help you spot trends. Higher lows, HL in an upward trend. The market creates a series of higher lows as it retraces before, continuing its bullish momentum. Higher highs, HH, as the market swings higher. It forms a new higher high after retracing from the previous higher low. Downward trend features. Lower highs, LH in a downward trend. The market will retrace upward, but the swing leaves a lower high before pushing downward again. Lower lows, LL, as the market pushes lower. It breaks the previous lower low, continuing the bearish movement. Once you've identified your HH, HL, LH, or LL, it's time to draw a parallel line. This creates what we call a forex channel. These channels are crucial for identifying support and resistance levels, which are essential in determining entry and exit points. Upper channel, a good opportunity for buying. Lower channel, a good opportunity for selling.